Hi, welcome to the Crypto Lifestyle. We focus on mass adoption, decentralization, and other aspects of cryptocurrency that'll bank you coin. Please comment, like, and subscribe. Hit the bell for notifications. Also, hit the link to our other socials in the description so you can become part of the TCL community all over the internet. I'm the Crypto Lifer. I also have a YouTube channel. I go live from 10 a.m. to 12 p.m. Monday through Friday, and Saturday and Sunday nights at 8 p.m. I also make content just like this video on my channel. The link is in the description and pinned in the comment section below. I'd love it if you subscribed. I'd really appreciate it. Today, I want to talk about loss. That's right, some people lose in cryptocurrency. The market can crash and correct, as we have seen. But what if you had a protocol that could stop that right in its tracks? What if you had a protocol that could protect your assets? They call it God mode here, as you can see behind me. This is very interesting. I want to get into this. I want to talk about it. I do have to disclose one thing. Here at the Crypto Lifestyle, we are not financial advisors. Please get yourself a financial advisor and do your own due diligence before getting into any project or coin. Now everyone loves to trade in cryptocurrency, right? But there are corrections, there are crashes, there are pullbacks. What if you could hold 90% of your entire value no matter what happens? Well, that's what this next project is going to tackle. So here comes the intro, get into it, and I'll be back with Bumper 5.
Crypto Lifestyle, baby.
Ooh, I love that intro every single time. Let's get into Bumper 5. Okay, so Bumper, what makes it amazing? What makes it unique? Now, God mode. What could you call God mode? Very interesting, right? God mode for crypto. Protect your crypto from price drops. Liquidity provision program launching on July 14th. They also have an awesome staking program right now that you can take advantage of. So I want to break that down and I want to show you that as well. That's another reason why I want to put Bumper on your radar today in the present time. Using Bumper is a bit like God mode cheat code for crypto assets. We're not saying it's cheating, but it feels like it. It's the first protocol that offers crypto invulnerability, if you can believe that. If you protect your crypto with Bumper, the price won't drop below the price you set, even if the market crashes. Importantly, if the market pumps, your asset also rises. So you get the pump without the dump. Quite interesting. Then there's a crypto power-up. By depositing your assets, you get exposed to the massive earning potential of being a liquidity provider. Bumper LPs earn a yield from the platform. They make money from premiums paid by users taking out protection. And when you earn and protect, you earn Bumper through a staking reward program. So Bumper is always being added. You're always gaining Bumper. Also, I believe Bumper is going to go up pretty fast. They say they're going to start at 60 cents and eventually it's going to be $2.40 right off the bat. I could see Bumper going up and doing 10, 20x pretty fast. This thing looks hot. They have an awesome video here taking you through exactly how it works, exactly how you would stake, how much you're protected by, how you redeem, how you can go in and out of a contract, and how easy it is. It's fast, it's affordable, and it makes sense. I think this is an amazing protocol. I think there should be more companies like this doing something similar. We have the technology to move assets at the speed of light. Now we can back up assets the second they drop. And we can fulfill redeemed assets to keep you from losing money. This is really, really interesting, guys. But check out that video. It's going to break it down for you. Nice and easy. Well done. Well edited. Even like the voiceover. Perfectly done. Shout out to Bumper for that video. You guys did a really good job. Nice and clean. Now, Bumper did open a private sale in 2021, and it was heavily oversubscribed by venture capitalists and closed $10 million from Alphabet, Autonomy, Beachhead, Chainlayer, and others. $32 million was declined. That's how many people wanted to get into this protocol. So you can only imagine, man, the FOMO that was created right at the beginning. Seems like people really want to get into this project. So it has that je ne sais quoi. People like this project. People want it. And you already have that research behind it. You can see how many VCs were dying to jump into Bumper. So remember when I said you can protect and earn? That's right. Protect your crypto from price, whatever the market throws at it. But Bumper protects the value of your crypto using an innovative DeFi protocol. You set the price you want to protect, and if the market crashes, your asset will never fall below that price. Now, that's easy to say, but let's take a look at the actual protocol. Let's break down what goes on. How does Bumper protect your assets? What's really going on behind the scenes? So first you select which asset you want to protect, and then you want to select the price floor. This is the minimum value that you're willing to take the asset back at. For instance, if you buy 10 ETH at $2,500, that's going to be $25,000 worth of ETH. But you could say that you wanted to get out at 90% price floor, which would be like 22,500. Now, if ETH tanks 30%, you will only lose the price floor that you had ETH set at, which is 90% of the value. You will have to pay the bumper fee at the time, but it's minimal compared to the damage you would receive going all the way down 30% on ETH. You can also jump in and out of plans at different times. Now, once you have to get into a policy, you have to stake bump, okay? If you don't have any bump, they'll take bump out of the ETH that you're staking. They'll do a conversion for you and stake the bump. I like that. I like that you don't have to go grab bump just to get things done. A lot of times I'm in a protocol or I'm doing something, for instance, like Binance Smart Chain. You send an asset in there, but you don't send the BNB. Now you can't use the BNB. There should be a quick protocol enabling you to convert whatever you have into BNB and then reconfirming the fee. It's like you can't move if you don't have the fee token. I like that Bumper lets you get the Bumper token right away, even if you don't have it inside of the protocol. That's really, really awesome. Now, once you stake, you'll have your Bumper tokens that you're getting as rewards. They can be sold, traded, or used within the broader DeFi landscape. You can stake them in yield farms, use them as collateral, and even provide them as liquidity. Now, the final step is when you finally redeem your policy, either above or below the floor price. By sending back your Bumper tokens, you're going to send back your Bumper tokens and pay the policy fee. That's how that works. You also receive the bump that you were staking back in addition to the accrued bonus. Now, if Bumper starts going up, it'll even pay for the protection fees too. There's a chance you could almost break even here and still stay protected. I like what Bumper's doing. Very, very interesting. So after you redeem, you'll receive the current market value of your asset that you initially protected in its original form. For example, if you protected 100% of your portfolio at 90% of its value, you will receive 100% of your portfolio back. You have the exact same amount of ETH that you protected to begin with. I love this. But what if you want to redeem below the price floor? And that's where Bumper really shines right here. When it comes to calling your policy, you'll receive 90% of the initial value of your protected ETH. That's 90% of your 25,000 as our example was. 22,500 paid in USDC. You've capped your losses at 10% plus the nominal Bumper fee, whereas regular participants would have lost 30%. So we kind of went over that, but just to show it on paper, see what they're saying, and see how they break it down in numbers. They designed Bumper to protect your assets, and you can exit or enter a protection policy pretty easily. There's no lengthy lock-in periods and no penalties if you want to jump in or out of protection. I like that. Once you redeem your policy, the cost of your protection will be prorated and deducted, and you can move right on. They're getting things done quick. Not a lot of double actions here. You do one thing, you go to redeem, and you're ready to go. Or if you want to protect, they got the Bumper ready to stake. You can do a quick conversion out of what you already have and keep it moving. So Bumper protects the value of your crypto using a radically innovative DeFi protocol. You set the price you want to protect, and if the market crashes, your asset will never fall below that price. Importantly, if the market pumps, your asset rises as well. So it's a keep safe on your locked protocol. Now, yeah, one could say, what's the difference between this and a stop loss? Well, this, you actually get the Bumper tokens. You're staking and earning at the same time. If Bumper goes up, it'll pay for the protection, in my opinion, and actually kind of zero out what you're doing here. So I think if Bumper becomes a very successful product, which I think it will because it's unique and you don't have access to this anywhere else online, it'll only push up the price of Bumper, therefore creating a great incentive to want to actually protect your assets too as well. Now, they also have a liquidity provision program that's launching on July 14th. That's only about 9 days from now. Check it out. 300% APY for early bump farmer and a buyer, 100% APY for the early bump farmer, and 22 million worth of bump to be farmed and bought. So let's take a look at what's going on there. You might want to get in early. So Bumper Liquidity Provision Program. Earn 300% APY by becoming an early bump supporter from July 14th. I mean, that's awesome. Well, right here, from July 14th to October 14th, the bump token price will be about 60 cents or more. By October 7th to the 14th, it'll be $1.80. And by the public sale on October, the bump price should be about $2.40. And who knows what will happen on the IDO in November. I mean, this thing could be $4, $5, $6, $7, $8, $9, $10 a coin. You never know. If the price stayed exactly flat, you'd be getting amazing rewards. Now, if the price goes up 4x, 5x from where it's at, oh my gosh, the rewards you're getting with that 300% APY are going to be bananas. So the token price will be correlated to the total value locked, and it will increase as the TVL increases. APY figures and modeling have been calibrated to a TVL of 150 million. Only the earliest supporters will get the best APYs, starting at 60 cents and increasing to $2.40 at the public sale. So the earlier, the better, man. The only catch here is you're going to have to lock up your USDC until October 14th, okay? At this point, you have the opportunity to leave your deposit in the protocol and continue to earn, or to withdraw and keep your locked bump tokens. And finally, all the earned and bought tokens will be unlocked in November at the IDO. At this point, you could trade them, sell them, hold them, or keep them long term if you think bump will continue to be a great project. Also, with only 250 million bump in the total supply, that's pretty small compared to a lot of these coins. The circulating supply at the IDO will only be 48 million. That's a great supply to make some gains. So I like the lower supply here too. That also comes into play for me. It's another reason why I really like Bumper Fi. So there's a lot of reasons why I really like this project. Number one, it's innovative. Number two, it's unique. And number three, it provides protection that a lot of people need in the game. We want to stake, we want to earn, we want to yield farm, but we don't always want to be out there with no stop loss as if we're not trading. This gives you the option to be a part of DeFi with some nice mental security. It's good to know that you're protected no matter what happens in the market. Look at the crash that just happened not too long ago. Prices dropped very, very fast. This would have protected your assets and had you in USDC ready to go, and then you could have opened up a new protection plan back at the floor again. You can also change your protection plans as price goes up or down, lowering your fees or your cost of the protection, depending on where you think the market's going. You can really use this to your advantage no matter what. I also think the staking and rewards program is quite lucrative, and you should definitely take advantage of it. It's coming out on July 14th, and I don't want you to miss it. TCLers, thank you guys so much for all your support. We really appreciate it. Please comment, like, and subscribe. Hit the bell for notifications so you can find out when we post our next video. Hit the link to all the different socials, and you know what it is. Till next time, you're on your own.